So you're ready to buy a house, and being the savvy consumer that you are, you know that it's a great idea to get pre-approved for mortgage financing before going out and falling in love with a home. So for a lot of people, the logical step is to go to the bank that they have their checking account with, walk up to the counter and ask to speak with a loan officer on site. The thought process for a lot of people is, I've had my checking and savings accounts here for 12 years. I'm a loyal customer. They're surely going to give me a good rate, right? Maybe not. See, the thing you have to keep in mind with banks is that they've got their hands in a lot of different jars. They're a depository institution, meaning they're taking in deposits for checking and savings accounts. They engage in auto lending, personal loans, credit cards. They have a wealth management division. For many banks, they offer mortgages not because they want to, but because they have to. And for this reason, banks tend to be really conservative when it comes to who can qualify. The fact that banks aren't hungry for a lot of mortgage business is also reflective in their rates. You're often going to see the highest interest rates from your large banks. So what's the alternative? Other than banks, mortgage lenders fit into one of three buckets: online lenders, direct lenders, and mortgage brokers. Let's talk about online lenders first. When I'm talking about an online lender, I'm talking about companies like Rocket Mortgage, Better.com, Amerisave. These are the types of places that heavily focus on inbound calls. A lot of these places go really heavy on marketing, and you see their logos everywhere. And this is a place where you're probably going to get the least experienced loan officers. It's like an assembly line. A loan officer takes your application and passes it off to the next person. If you have questions, you're going to need to call their 800 number and get passed around till you get to the right department. The skill level seems to be the lowest at these types of lenders. They might have okay rates. A lot of them have awful rates because they have to recoup all that spending money somewhere. Other outfits who may not spend billions of dollars on advertising per year can offer competitive rates, and a place like this could be a decent option if you're what we call an A-plus client. Somebody who's a W-2 employee, been on the same job for 10 years, salaried, great credit, things of that nature. You may very well get a competitive rate from an online lender, but that's the exception and not the rule. They tend to be national companies, so they don't have that local presence where you can walk into the office and see your loan officer face to face. And for this reason, they don't particularly care whether they meet closing dates or not. And then there's retail lenders, also known as direct lenders. These types of companies are going to be places like Guaranteed Rate, Movement Mortgage, Guild. Now, these types of companies focus solely on mortgage lending, so it's a better option than a bank, and they have in-house underwriters and typically have local presence in a lot of markets. So for that reason, it's also a better option than going to an online lender. Direct lenders can be a good option for a lot of people. They can typically close loans relatively quickly, relatively efficiently. A lot of them have teams, so a few different people will be handling your file. But overall, it's a safe and efficient way to go about business. And finally, mortgage brokers. I'm a mortgage broker. I work for a company called Atlantic Coast Financial Services. We've been in business since 1996, and in my unbiased opinion, mortgage brokers are the best option. And there's a few reasons for this. One, we have access to wholesale rates. What this means is that because we do the legwork of originating the loan, we have our own offices, we use our own equipment, it saves lenders money. So you're able to get a break on your interest rates and fees that you pay for this reason. Also, we have access to a number of different lenders, so we're able to shop each individual loan application among a bunch of lenders to find out who's going to offer the best rates, the best fees, and probably more importantly, the best service. That's why we're not only able to give you the best terms, but we're able to close loans faster than anybody. It's not uncommon for us to submit a file, have approval the same day, and close a week or two later. If there's something a little screwy with a file and one lender turns it down, the great thing about using a mortgage broker is that they have the ability to repackage the loan and submit it to one of their other lenders. See, just because the loan gets denied by one of our lenders doesn't mean that we can't send it elsewhere and have that underwriter approve the loan. So we truly are a one-stop shop. Don't just take my word for it, shop around. Get a quote from your bank, get one from a direct lender, and talk to a mortgage broker. See who has the best terms and who you're most comfortable working with. I really hope that this video was informative and kind of told you the difference between different types of mortgage lenders. If you have any questions, feel free to reach out. I'd love to chat.